Let's get more on the markets from Jay Bala, CEO, Senior Portfolio Manager at AIP Asset Management. Thanks very much for joining us.
Oh, thanks for inviting me to the show.
Just focusing on Canada, you think this is kind of an exciting election campaign in that we could get a major policy shift and changes that are needed?
I think this has been one of the most exciting election campaigns of my life, really. I mean, for the first time, you've seen two parties talk more about policy than, name calling, which has been nice, right? And the other one is, if you look at, economies over a longer period of time, it's crisis moments that define a country. It's what do you do when things don't go great, right? And I think these are those moments where Canadians can sit down and say, okay, well, who do we want to be as a country for the next 100 years, right? Do we want to be, a smaller country that's reliant on a very large trading partner? Or do we want to sort of break out and say, look, this is who we are as a nation. I think, and that really comes down to, well, what's our taxation look like, right? And so, I think there's been a lot of discussion about capital gains tax. And, obviously, Pierre Poilievre has come out to say that he would do a capital gains tax. He'll cut the capital gains tax to zero, which I think is a fundamental game changer in the way that people would look at investments for the next 100 years in Canada. Now, the only downside to this is that he's saying it's only a 1-year limit. And so, if you want big money, if you want larger corporations to start looking at that, you can't do 12 months, right?
Well, how does that work, Jay, the 12-month thing?
Meaning you can buy and sell any asset you want in Canada as long as you reinvest it back in Canada.
Yes.
But it's only from, I think it was from June 2025 to June 2026.
I see, okay.
Right? But then what happens a month after that? Do you go back to a huge trigger?
Yes.
But, if you look at, what that does for the country, it's phenomenal, right? In terms of our stock market, suddenly it breathes a ton of life into that, right? And it attracts a lot of capital into the country. So I think he's definitely on the right track. And I think, once, we see the end of this election campaign on, what are we going to do there? I think that could be, a significant game changer in the way that the Canadian financial markets operate. And, how do we build wealth in this country on a go-forward basis, right?
The Liberals have been accused of being obsessed with the redistribution of income and fairness. And nobody would dispute that's a laudable goal. But do you think there has been a major shift towards actually economic growth and less on economic equality?
Yeah, it's actually very interesting in, the way we all discuss that, right? I grew up in an environment which basically said, look, the fundamental goal of any society, any modern developed society, is to maximize the wealth of your middle class.
Okay.
Right? And the functional reason for that is, look, the middle class is the majority and they are the customer base, fundamentally. They're the people that buy all your products.
Yes.
And so the richer they get, the better off everybody is.
Sure.
The poor are better off, the richer are better off, companies are better off. And so it's functionally, well, how do you do that, right? Because the middle class only has two, sources of wealth. It's higher wages or you can increase their savings. Right? So I thought the capital gains tax was amazing in that it allows you to increase your savings.
This proposal by Poilievre, you mean?
Exactly.
Okay.
Right? Carney did the same thing. He at least stopped the increase in capital gains.
In the inclusion rate.
Right.
Yeah.
And so I think Poilievre has gone one step further. So let's see what Mark Carney has to say about it. Maybe he'll go and extend it further, which would be even better, right? But I think we're definitely on the right track of building that middle class wealth. Right? So, I think, we still got a few weeks to go in the election. So I'm quite excited about, what comes of that, right? What are the other things that we could do to improve that wealth quality of the average Canadian, right?
What is your strategy now? Do you think Canadian stocks are unfairly beaten up? I know they have outperformed U.S. equities this year,
Sure.
But are they too cheap, Canadian stocks?
I think if we're talking about, zero capital gains tax, I think it's very cheap.
That's interesting. You think this enough of a game changer to this thing?
Absolutely. And I think this is one of those great times where, people really need to go back and look at your portfolio and say, look, am I actually diversified the way I need to be diversified, right? Because for the longest time, our concept of diversification was just buying the S&P 500.
Yes. Yeah.
Right? And so, with all these trade wars going on, and if you look at revenue streams for the S&P 500 companies, 40% of revenues come from international markets.
Wow.
And so, if you're going to put up trade barriers and people are going to, start fighting back against you and not buying as many products, well, is that truly still a diversification tool, or do you need to re-examine your portfolio and say, look, I need direct access to European markets, to Asian markets, to other markets that's not the US, right? And I think, fundamentally, that's a question everybody should be asking themselves. And I think it's a great time to just do that deep dive research into your own portfolio to say, look, how am I positioned here, right? I mean, we've got a very uncertain future, but, diversification at the end of the day is the best way to defend against everything, right?
And you say you're in the camp that say the time for alternative investments is now. It's a thing people should be exploring.
Absolutely, absolutely. I think the old 60-40 model, which was 60% equities, 40% income, fixed income, doesn't functionally work. I think we all know that, right? And so everybody's been playing with different models. And the one that's most popular now is the 40-30-30, which is 40% equities, 30% fixed income, 30% alternatives. Mm-hmm. And for alternatives, I really can't stress this enough. It's complicated. And so, don't be shy for asking for help. Like, even if you're a do-it-yourself investor, maybe take care of your fixed income and your equities because you know that space. And for your alternatives, maybe talk to a smart financial advisor, talk to a portfolio manager, at least get some advice before you go into that world, right? Because it is a different world, right?
You're talking about possibly private equity funds or
private credit funds, hedge funds. So I mean that's a different world, right? And I think people should be careful as they step into that world, and they should probably step in carefully and with some sort of advice and guidance as they go into that world.
From time to time, you get these funds declaring a liquidity problem, and they'll delay redemptions and stuff like that. Yeah.
And look, I mean, fundamentally, because they are private assets. I mean, they're completely different assets, right? You know what I mean?
Yeah.
Like if you buy a building, it's not so easy to sell the building, right? And so, you have to be patient. And then that's what I'm saying. Like, you need someone to give you that advice to say, look, if you're going to have 20% alternatives, that other 80% better be super liquid.
Right.
Right? I mean, that's how you solve for the problem, right?